Hey there, traders. It's Wednesday, January 26th, 2022, and I want you to see something at the top right over there, that direction there. See that 78 IV rank for QQQ? Sweet, right? Maybe in this recent market condition, you want to pick direction, but you're kind of scared. Well, today's trade, of course, from Tasty Trade, the cherry bomb trade, is the Qs, and it's an iron condor, so you don't have to pick a direction. Though I'll be honest, the trade as sent to us today actually has a little bit of a direction. I do have an alternative where we try to pick some different strikes to make this more neutral. But if you're interested in this trade, let's get going, shall we? Hi, everybody. My name is Neil, and this is Option Theory. I do want to thank you so much for joining us. We're inside of Thinkorswim's simulated trading, of course, so we can get all the learning without any of the risk. And if that sounds something like you might like, maybe you'll like this video. All right, cool. So on screen here, let's pull up the chart here for Qs. And as we've seen with the market recently, boy, it has been going down, right? And the question is, you might start thinking it's coming back, but it doesn't, right? You have a green day, and down. We have a green day and then down. And then what are we having right now over the overnight futures? Oh, quite a green day, right? And of course, I got a little music going in my head right there. So we're looking at almost 2% already in the overnight futures. But as we've seen, that can reverse at any point. It does seem the market is very sensitive to what's happening right now with NATO and Ukraine and all that stuff. So with that in mind, let's take a look at the cherry bomb trade as sent to us today from Tasty Trade. Linked it in the description down below if you want to get these emails from Tasty Trade too. It's not an affiliate and commission thing at all for me. There is no money that I'm making from doing this. I hope you can appreciate that. And if you got it in you, hit that subscribe button. All right, let's go down. And what we're going to do is be in the March 5th weeklies. March 4th weeklies. There we are, 37 days to expiration. The trade as sent to us is going to be the 290 is the short put, and the long put is to 285. There it is, 290 short, 285 put. The long short call is going to be the 368 call. The long call is the 373. So that's the iron condor here. I'm going to pull that up, let you see them here. So remember, iron condors are just strangles, right, with the protective options on the outsides. And so the two short strikes, strangle strikes, right? Your short put, 290. Your short call is 368. Buy protection, $5 outside of that on either side. You've got yourself a $5 wide iron condor that collects about 1/3 the width of strikes. Go to the risk profile here and take a look at our probabilities. In the top right corner, make sure you set your date, the same date you see in blue in the bottom left corner. I'm going to drag this down now so that our risk profile is a little bit bigger. And you can see we're not centered. So here is our current share price right here, and here's the center. So naturally, you won't be surprised to see that we are at a negative 4 something delta. So we would benefit should the underlying come down, which the underlying is not coming down right now. But if you want to leave yourself a trade where you could profit if it goes up a little bit, you could profit if it stays where it is, and you can profit if it goes down quite a bit, right? Then this iron condor might be for you. We're going to go ahead and put this trade on in the margin account. Right click this trade, choose Confirmance, and can't see it, so give me a second. There it is here. Our max profit's 164. Our max loss is 336. That's the most that you can lose. Hopefully you can sleep at night knowing that that's the case no matter what happens, good or bad or neutral. All right, so we'll go ahead and put that in there and hit send. And let's go and switch over to Tastyworks, where I have a more neutral alternative here for you. And you can see here that we're looking at moving the strikes a little bit so we can get centered. Yeah, there that is. Let me zoom in a little bit. We're looking at being short the 315 put, short the 375 call. We're then going to buy protection $5 wide out of that. So 310 put, long, and the 380 call. That gives us a delta of negative 2.9, or let's call it negative 3. So apparently we would still be bearish on this one. Our probability of profit, which I didn't discuss, shame on me, with that trade back there. Guess we'll have to go back and look. Oh, no, it's 65%. It looks like it was. All right. Probability of profit on this trade is 59%, so lower probability of profit on this one. P50 of 68. A max credit of 172. So slightly more credit potential on this one, slightly lower maximum loss. But of course, lower probabilities. All right. Which of these two iron condors suits you? I wonder. All right, friends. With that said, I do wish you a best of luck today in the market, and a big thumbs up to you for watching this far. If you feel I've earned one, there is a thumbs up button down there. I do appreciate all your views, likes, subscriptions. Till next time, may the market be with you.